Hello, my name is Christian Jr. I'm the Managing Director of FinTech. We are a software engineering company based in London, UK. As a financial institution, a credit union, a microfinance bank, or a FinTech organization, choosing your core banking application is one of the biggest decisions you will make. It is a big decision because you've got to make this decision from a customer satisfaction perspective, digital risk management perspective, cybersecurity perspective, as well as a service delivery perspective. Oftentimes, you find that credit unions make this decision based on marketing presentations by vendors of these software applications. You will find that the key decision lies with the board of directors of a credit union. Oftentimes, you will find that the board of directors of the credit unions are non-IT professionals. Therefore, they do not know what to look out for in this core banking software application. Sometimes credit unions and other financial institutions may involve the IT team in the decision-making process. For example, the IT manager may be called in to give their opinions on the core banking application. You will also find that IT managers are not software engineers, so they too do not know the key details to look out for in core banking applications. How then do you decide what core banking platform to use for your business or your organization? In this video, I have created a list of 10 key things that you must look out for whilst choosing or deciding on what core banking platform to use for your credit union or financial institution. In addition to these 10 considerations, credit unions must also decide what way to go about acquiring their core banking application. There are a bunch of options. First of all, you could, which is what a lot of credit unions do right now, you could go to a software vendor, buy an application from them, and pay them an annual licensing fee based on the usage of that application. You could also put together a competent software engineering team and build your core banking application from scratch. You could look for what we call an open source application and then customize this open source application to suit the needs and requirements of your credit union. Finally, you could outsource this entire process of developing your core banking application to a very competent IT or software engineering firm like Rick's Technology. If you'd like to find out these 10 considerations that you must make whilst choosing your next core banking application, then please stay tuned and watch the rest of this video. For the rest of this session, I will go through some of the things you need to look out for when you're trying to choose a banking application. These are features of banking applications that you should desire to have in your financial institution. Some of these are also activities and actions that I think that you need to undertake before you actually decide on a banking software application to use. This presentation is relevant to financial institutions, credit unions, microfinance bank, fintech organizations that feel that they need banking applications in order to deliver their products or services to their consumers. Now, this list, I know at the start of the video I said 10 things that you need to consider. However, I have made a list of 15 things that you should consider whilst trying to choose a banking software application. It is important to note this disclaimer. The 15 things you see on your screen are non-exhaustive. So these are just some of the things that I have curated based on my interactions with credit unions over the last couple of years. You may have certain features or you may require certain features that are not on this list. These requirements may be specific to your credit union or specific to your location, jurisdiction. You may need these features for the sake of compliance with your regulator. So if I haven't captured any of these, please do not feel like you don't have to look out for those things. I've only captured the 15 key things that are usually consistent across core banking applications in the 21st century. So again, this list is non-exhaustive. At the end of this session, I expect you all to be able to go back and look at core banking vendors and then be able to make informed decisions based on the knowledge you will acquire over the next couple of minutes. So the first thing I want to talk about is open banking. Open banking is one of the core features that your banking applications must have. Open banking is a framework or a philosophy or whatever you want to call it that was started by the Bank of England. Open banking basically is a process of your bank speaking to you, speaking for you, or speaking on your behalf. It puts you in control of your data. It allows you to move your data, manage your money, and make the most of your banking facilities. Open banking can be defined also as a collaboration between banks, where banks can share information about customers with the permission of that customer. So with that, I am able to share my information, for example, with a FinTech application. If I have a bank account and I want to monitor my expenses, I could share access to my bank account with a FinTech application that tells me how much I'm spending. So that application can tell me you're spending too much money on coffee every morning. You've spent $20 on coffee this week. If you had invested those $20, you would have made X amount of money on the stock market. So open banking basically allows banking customers to share their data and allow other financial institutions, other regulated financial institutions, I must say, to gain access to this data. There are three main aspects of open banking. The first bit of open banking is the release of reference information via APIs. Now, what this means is, through your open banking APIs, third-party applications may be able to get information as to your business, your branches, your locations, locations of your ATMs, and things like those. The second phase of the open banking standard or framework is the release of product information via the open data APIs. So the framework allows banks to develop their APIs that gives third parties access to information about the bank's products. For example, you're trying to get a loan, you want to know the interest rates of a bunch of financial institutions. So through open banking, you could easily get those information. How much does Barclays Bank or Republic Bank or Scotia Bank charge per for loans that their customers take? So this open standardization could also apply to credit unions, where you can pick out information about the credit union, find out the terms and conditions of their loans, savings accounts, and membership information. The final bit of the open banking standard is the release of personal, current, and business account transaction sets. This is the most important aspect of open banking that any financial institution should focus on. This is the part of open banking that gives you access to the customer's information. It also allows the customer to initiate payments from their bank account to a third party. How does this work? So open banking enables account servicing payment service providers. These include banks, credit unions, and building societies, to allow members to share their personal and business account data securely with third-party providers. So imagine I'm a customer of Fire Service Credit Union, for example, and I want to open a new account with perhaps another credit union, a new savings account, or I want to open an account with another financial service institution. Instead of providing my details all over again, signing up to the form, I can then say log in with my Fire Service Credit Union account. So when I authenticate myself on my Fire Service Credit Union, it will then ask me, do you want to give us permission to share your details with Scotiabank? If you then say yes, it then gives Scotiabank access to those data, the specific data that you want to share. But think about it in the reverse. Imagine a customer of Scotiabank wants to open an account with your credit union. Instead of entering their details all over again, you know that Scotiabank has authenticated them, they've done KYC. You can then allow this customer to log into their Scotiabank account and then give the bank permission to share their information with you, which could include date of birth, personal identifiable data, or any other data that the customer chooses to share. The next bit that you can actually do with open banking is allow your members to authorize payments via their online banking or mobile banking applications. Again, how does this work? I go into a shop to buy something. I go online to buy something. I want to pay. Instead of paying with my credit or debit card that has bank charges attached to it, both from a customer and a merchant perspective, what I then do is log into my bank account, authorize the payment, and that payment is released by my bank to the third parties. In this process, my bank never shares my login details or any identifiable data with the third party. I log in directly to my bank authorizes the payment and then releases the payment to the third party. So when you think about open banking, both from data sharing, information sharing, to transaction processing, open banking makes a lot of sense. In addition to all of the features I've mentioned about open banking, the open banking framework actually allows third parties to build additional applications that may sit on top of the core banking application and provide additional services to the customer. Some benefits of open banking: you give customers greater access to their data because they can share their data easily across financial institutions. You would realize that each customer holds products or services with multiple financial institutions. So giving them the ability to port their data without having to enter that data every time they want to sign up to a financial service, it's actually a great value creation for the customer, because you're saving them a lot of time, you're saving them some stress, and you are improving their customer experience by allowing them to use one platform to gain access to the other platform, right? So you can improve your engagement. You can improve your overall customer engagement with open banking because the customer is more engaged on your platform. There are so many things to do. They can accomplish a lot more with an open banking enabled banking platform than not. You can actually increase digital revenue with open banking. So if you're a financial institution and you give access to some parts of your APIs, for example, you could, as a financial institution, you could build an exchange rate API that other financial institutions can tap into to say, what is the actual exchange rate if I'm trying to send Trinidad and Tobago dollars to the US? And you could actually sell out this access to this API where people pay you a fee every time they use this resource to check exchange rates, for example. There are many, many things that financial institutions and credit unions can do with open banking. You could actually deliver banking as a service where you onboard agents to help you deliver your products and your services to rural areas where you may not be able to reach, or you may not have a physical branch, or where smart devices are not rampant, or in a location where you have an aging population. You could actually use open banking to empower your agents to deliver the products and services to these people in remote areas. You can create multiple revenue streams because you can build new applications that are powered by open banking that actually create enormous value for the customer. If you want to learn a lot more about open banking, I implore you to join our digital risk management course, because we have a module specifically focusing on open banking where I will shed more light. I will share more light and share a lot more stuff around open banking. I will also show you practical case studies where financial institutions have implemented the open banking framework. You will see how it works, so you can start thinking about ideas of what you can do with your credit union. Also, just to add, a number of governments and central banks are implementing pardon me, that's an error. They are actually implementing the open banking framework. It started from England. It has spread quickly to Africa, to Asia, and other parts of the world as well. I know that the Americans are actually leading consultations on open banking at the moment. The next step that I think every credit union must seriously consider is the security by design. So, as standard, your core banking application should be secure by design. What is security by design? You will find that a lot of legacy banking applications, they struggle to meet up with regulatory requirements because they have to patch up their applications that had not been designed with the kind of threats and cybersecurity risks that we face today. A lot of the legacy applications were not designed with these things in mind. They were not designed with these threats. When they were designed, these threats were not available, or they were not persistent. So now you find a lot of legacy banking applications struggling to actually meet up because their systems are not scalable enough, they are not robust enough to handle the new regulatory requirements that are coming. I know about a few financial institutions that have had to rewrite their entire banking application from the scratch because it is not relevant in this day and age. So what is security by design? Security should be a key consideration throughout your platform. Your banking application should feature several consumer safety and security measures. In the UK, the UK Financial Conduct Authority has recently implemented a strong customer authentication under PSD2 and GDPR and other regulatory requirements. What does the strong customer authentication mean? It means that at every point in time, you don't only authenticate your customers when they log into the application. You continuously authenticate your customers even as they log in successfully and continue to use the application. So you're supposed to authenticate your customers with something that they know, for example, a PIN or a password. You're also supposed to authenticate them with something that they have, for example, their bank card, their mobile phone, etc. You also have to authenticate customers with something that they are, maybe their fingerprint, their retina scan, other biometrics such as DNA, voice recognition, etc., etc. You will find that when you use a combination of these security measures, your application is more secure than not. I'll give you a practical case study. For example, I log into the application. Let's assume a user's login details have been compromised. So let's assume that a hacker now has access to a member's username and password. The hacker logs into the application. That is the first step, something that they know, which is the PIN and the password. As the hacker logs into the application, an application that has been designed with security in mind from the get-go, it should know that this user is logging in from a new location or from a new device, so prompt the user to authenticate themselves through a different means. Then you ask them for something that they have. So you then tell the user, we recognize you're logging in for the first time from this device. Can you please turn on your mobile phone and authenticate yourself on the app that you have on your mobile phone? Or you could say, what are the last digits of your bank card to authenticate themselves? Or you could send them an OTP to their mobile phones or email addresses to make sure that they are who they say they are. Then finally, as with many modern banking applications, you can go a step further and make sure that the users can only gain access to your platform using a fingerprint recognition system or a retina scan and any other biometric that you can use. So with security by design, you're not only preventing access to the application, you're actually monitoring the user on the application even if they have legitimately gained access to the application. So some things that you need to look out for when you're looking out for SCA, strong customer authentication. Look out for biometric authentication, fingerprint access, iris scan, retina scan, where you have deployed your banking application on mobile. Look out for applications that have two-factor authentications, one-time passwords that would be sent to mobile phones or email addresses for certain transactions. Again, look out for email and telephone verification on registration and onboarding. I think this is something that every organization does now. So again, the next bit might be difficult for you to check, like to make sure that the passwords and the pins that are used on the platforms are actually encrypted. This is something that maybe somebody more technical in your team, you can actually look at the encryption technology and the encryption process that the application uses before you make a decision to buy. The next thing you have to look out for is KYC. So if you are designing with security in mind from the start, you would really focus a lot on KYC. So from ID verification to proof of address to real-time photo, selfies, videos to make sure that the person is who they say they are, all of these can actually be built into your banking application. With your banking application, you can actually do your anti-money laundering checks, terrorist funding checks, politically exposed persons checks, and not only at the start of your onboarding, but you can continuously do this throughout the life cycle of that customer. With security by design, the application also takes into consideration the device, the connection, the location, and identification of the customer. So your application should know that the customer is logging in from a new device, the customer is logging in from a new internet connection, the customer is logging in from a new location, and your application is supposed to take an action every time it realizes that one of those things are happening to further identify that the customer is who they say they are. So for example, if I'm always connecting to my banking application from my laptop in London, and then suddenly I'm on a mobile phone somewhere in the Caribbean, then that application should know that there is something unusual. It should then stop me from conducting transactions and ask me to authenticate myself again to make sure that I am who I say I am. Other considerations from a strong customer authentication perspective would involve behavioral analytics powered by AI, where you can monitor the user habits, monitor the transaction histories, and then make sure that the customer is who they are by monitoring what they are doing now and comparing it in real time to how they have used the platform before. You could also use other methods like biometric verification, passive biometric verification, where you know who the human is, right? Because the human calls you every time, and if you're using a call center application that's connected to your core banking application, the call center application should know the user's voice. It should recognize the user's voice. It should save a copy of the user's voice somewhere on the application. So every time the user calls again, it can compare the saved version of the user's voice to the person actually on the phone to determine if the user is actually who they say they are. We can also look at real-time trust. So like I said earlier, make sure that even though the user has authenticated themselves, as they continue to use the application, you are continuously monitoring them in real time, analyzing their behaviors, analyzing the transactions that they're making to make sure that they are in line with this customer's usual behavior. In the instance where you suspect that something is amiss, you can then pause the transaction and ask the user for further verifications. For example, if a user is trying to make a payment and you feel like this payment may be fraudulent, then you may hold that transaction and ask the user to send you a copy of the physical card. You can do all of these things on your core banking application automatically. Then the next bit is push notifications. So your core banking application at the least should be able to send users push notifications on activities on their account. You could actually give the user the option to determine what activities they receive notifications and alerts for. For example, the user can say, every time there's a transaction on my account, I want to be sent a notification. But every time I receive a payment, I do not want to receive such notifications. So you can give the user a lot of control over the push notifications so they don't get upset with too much information coming in. The final bit is the user access management. So your core banking application should have a multiple user access levels. So there should be the super administrator. There should be other people that have access to only see information about the customer and perhaps not be able to see other things. So you should have different levels of access to this application so that your staff have access to only the information that they need to carry out their jobs. So you're not exposing them to customer data that they do not need to see at all. If you have all of these, there are more considerations as part of your strong customer authentication or security by design. There are many more considerations. However, I've just highlighted all of this. If you want to find out more about a lot of what I've talked about, biometric authentication, if you want to see more use cases of this, again, I invite you to join our digital risk management program that sheds a lot of light into everything that I've talked about, and we will go into even more detail in describing all of the strong customer authentication features I've mentioned. So one thing I want to focus on is biometric authentication. So every banking application now, regardless of, especially the ones deployed on mobile devices, they must use some form of biometric authentication. There are three ways you could use biometric authentication: the biological biometrics, which uses human DNA. Then there's morphological biometrics, which uses different parts of your human body, different characteristics of your human body. For example, your fingerprint, your eye, your retina scan, your voice. All of these are morphological biometrics that you could use to authenticate users on your platform as well. The final bit of biometric authentication you could use is behavioral biometrics. So behavioral biometrics basically continuously looks at what the user is doing, analyzes the way the user behaves, analyzes the way the user talks and interacts with the credit union to determine if they are who they say they are. There are many ways we can apply all of this. So we can apply them by using fingerprint recognition, facial recognition, voice recognition, the retina scan as well. I've spoken about that a few times. So if you incorporate all of this into your core banking application, I will then say that perhaps your application is secure by design. Okay, number 3, mobile and contactless payments. So as a tech company that specializes in software engineering, we focus a lot on mobile payments. If you look around the world, you would realize that 80% of internet users access the internet via their mobile devices. A lot of people may not have the finances, the means to buy fancy computers, but they all have smartphones. A lot of people may not have iPhones or whatever, but they have Android phones that can access WhatsApp, Facebook, Instagram. Once a mobile device can access Facebook and Instagram and WhatsApp, you can also deploy a banking application on that device. So the first deployment channel for every credit union thinking about digitizing and putting out online banking application must be mobile. In fact, I will deploy an application on mobile first before I deploy an application on the web. In fact, I may not even deploy an application on the web. I may just deploy the application on mobile only. There are many reasons why mobile is the ideal platform for transactions. One of them is that you can authenticate users on mobile even better than you can do on the web. On mobile, you can make a user log in with their fingerprint. You can scan a user's eyes to make sure they are who they say they are. There are many other things that you can do. You can know where that device is in real time to be able to make sure that the customer is actually using the app in the location that they usually use that app. So at the least, we expect that your credit union banking application or microfinance banking application is deployed on iOS and Android applications at the least. Your mobile application should also have some form of NFC payments and contactless payments where you just touch another device and then you can pay that person or pay that business by authenticating yourself and authorizing the transaction. Also, key considerations for your credit union should be digital wallets. Digital wallets are very convenient. We'll talk about that also in the next couple of minutes. Mobile devices also foster peer-to-peer payments. It's easy for me to pay people by either scanning QR codes or bumping my phone with somebody else's phone, and I can make a payment to them. With mobile technology, you can also make sure that your members, your credit union members, can actually send money to other members from their savings account or any kind of funds they hold on your platform. Finally, with mobile and contactless payment, it is very easy to promote mobile commerce and point of sale. One of the things that you will find is that a lot of your credit union members have side hustles or side businesses. So why not give them a banking application that not only caters for them as individuals, but also for their business? So a customer that is a member of your credit union can now accept payments when people come to their shops, and it goes straight to their credit union accounts. And if you implement this properly as part of your banking application, it means that every time this customer receives payment, it comes at no cost to the customer and no cost to the credit union. So you can really cut out a lot of the bank charges on credit union transactions, debit card transactions by implementing point of sale into your mobile applications. So when you look at the future of payments is increasingly mobile based. Now, because we have more people with more mobile devices, naturally, they are accessing financial services from their mobile devices than ever before. This has led to new possibilities. There are now many mobile applications out there doing so many different things. There is an app for saving, there is an app for investment, there is an app for checking how much you spend on things, there is an app that tells you if you're spending too much money on food. There are apps for everything, right? So as a credit union, you must also start to think, how do we develop an app that has all of these features to make our customers and our members and our users stay on our platforms without hopping across multiple mobile apps to perform multiple functions. Okay, so when we look at mobile payments, when we look at the future of money as a whole and the future of payments, there are many more possibilities created by mobile and open banking. As a result of that, the future of payments is cashless. There will be less and less cash transactions as we go on. Now, payments will be increasingly automated and invisible. So imagine walking to a shop, you finish shopping, you just get all the things and you leave the shop without going to the cashier or the checkout to pay. How is this possible? Well, you have a mobile device in your pocket. With your mobile device, as soon as you get into the shop already knows who you are. As you take stuff from the pile and put them on your shopping cart, the shop also knows what you're picking. As you leave the shop knows what's in your cart. They know you as an individual. They just automatically debit your mobile device using NFC communication with the value of the things that you have bought. Again, the process of payment will be heavily driven by data. So you would find more security, payment security that uses customer data. For example, if I want to make a payment online and it would ask me for my email address and telephone number. Now, because I've made several payments online, I have a history of payments. So all of these platforms know I use a particular email address and a particular telephone number to pay. When I come and I try to pay with the same card and different detail, you will find that sometimes those payments will fail. Stripe does this really well. With Stripe, once you enter your telephone number, Stripe can actually charge a card that is attached to your account by using the data you have used before. The transparency of financial data will increase, and it would allow for more access to loans, because with open banking, you're able to see how much a customer earns in real time. You're able to see the money that comes into a customer's account, obviously with permission from that customer. So you're able to know in real time if the customer can afford the loan that they're applying for. Now, the key, one of our bit of mobile banking and the future of payments is this. A lot of mobile technologies will be built on available infrastructure. What does this mean? If I were to build an app tomorrow and I say I want this app to have biometric authentication, I don't have to build that technology from scratch. That technology is already available because your mobile phones come already built with biometric authentication. All I would need to do as an organization is just tap into these APIs and use it to do what I need to do. I would not have to create that biometric authentication from scratch. Okay, so the future of money. Like I said, payments will be more cashless because FinTech has changed the way people think about money and the way people exchange value. So the future of payments, you will see that FinTech has disrupted a lot of the traditional ways people do things. So look at some of the disruptions that have taken place. We have blockchain, distributed ledger technology. We have digital currencies, Bitcoin, Dcash that's just been issued by the East Caribbean Central Bank. Then you have peer-to-peer transfers, you have mobile banking, digital wallets, you have a lot of, you have alternative lending, you have crowdfunding. All of these are technologies that have been made possible by open banking and mobile technology. Therefore, your credit union must incorporate these two pieces of technology in your next banking application or software. The next thing I want to talk about is artificial intelligence. Now, AI is a broad subject when we talk about banking. There are many, many ways you can use AI. However, for the sake of this presentation, I will keep it very succinct. If you want to find out more about how AI is influencing banking, cybersecurity, and the likes of it, then again, join our digital risk management program where we will talk in depth about AI, the ethics of AI, the ethics, morals and ethics of using AI, what organizations are doing with AI, banks, governments, and other institutions. So with AI, I talked about behavioral analytics earlier. With AI, we can easily implement things like behavioral analytics, behavioral biometrics, transaction monitoring, anomaly detection, which I said earlier. A customer is used to sending $20 every day, and suddenly this customer wants to do a transaction of $2,000. So that is an anomaly because the AI should know that this is something that is unusual. The customer doesn't usually do these high value transactions. So what is happening now? So with AI, you can do things like monitor the transactions. When you discover an anomaly, take an action, prompt the user to do something else. So AI can also help with geolocation tracking. With AI, you can deliver content to people based on their location. You could also trigger security processes, security flows based on the user's location. Again, a user is in Trinidad and Tobago every day using their product and their app. all of a sudden this user turns up in Ghana. They might be on holiday in Ghana. This user turns up in Ghana. That is unusual. So with our geolocation tracking, we would know that this user is miles away from their usual location. So let's make them authenticate themselves again. So we have fraud prevention. There are many ways that AI is used in fraud prevention. So before making a choice on your banking software, you should sit down and ask the vendors or look into their application and see how AI is being used throughout the application before you make that decision to purchase. The next bit is number 5 is regulatory technology and built-in compliance. So RegTech basically means regulatory technology. You will find that due to the changing nature of regulation, so central banks and regulators, they create policies and their policies change over time. As a result of that, your credit union must be agile enough to respond to regulatory changes. You will find that there are lots of tech companies that have products. They've developed products that are solely focused on ensuring regulatory compliance. So as a credit union, if your banking application is open enough, then you can incorporate a number of third-party RegTech tools or applications to make sure that you meet your compliance requirements. In the instance that your core banking application is not open and you can't build or install third-party applications, then at the least you need to ensure that the banking application you're using has built-in regulatory frameworks and regulatory tools. Some of these tools are highlighted below. For example, electronic KYC. Why do I have to come into the bank or your office to submit my ID for you to get them checked, when I can do that on a mobile app? And the mobile app, again, using artificial intelligence, it can actually authenticate the document. It will tell you if the document is fake. In fact, there are so many good platforms out there. If you would like to find out some of these, then drop me an email. I'll give you a list of eKYC platforms. There are many of them that you can actually incorporate into your banking application, so members would not need to come to the physical office location in order to open an account, onboard to the application, or sign up to your credit union. So with regulatory technology, you can do KYC electronically. You can do your anti-money laundering checks. You can do your PEP checks, your sanction checks on a mobile device without the user leaving the comfort of their homes or coming to a credit union. In addition to that, with regulatory technology, you can do continuous KYC and AML monitoring. What does that mean? It means that you don't only do KYC when the user onboards to the platform, you continuously monitor that user's profile. So imagine that you do KYC at the start of your relationship with a customer, and your KYC comes out as passed because the user is not sanctioned, is not a politically exposed person, and then 12 months down the line, this particular user maybe runs for office and then wins an election, and then it becomes politically exposed. How do you then know that this user is now a politically exposed person? Or what if this user, 2 years after your relationship started, gets sanctioned and you do not know that this user is on the US Treasury sanctions list? So with continuous KYC and AML monitoring, your application tells you in real time of any changes to your customers' KYC statuses. You can also use, with continuous KYC monitoring, you can also use tiered KYC, where you say, if you're starting a relationship with a credit union and you want to do, or a FinTech or a microfinance bank, and you want to do transactions of very low value, then we can give you access to our platform, say, to allow you to try out the platform and carry out transactions, for example, $100 or less or $500 or less, by just authenticating and confirming your email address and telephone numbers. Now, if you want to start making bigger transactions, we can then move you to a next KYC tier, where we then ask you for more information. Send us your passport, proof of ID, proof of address, proof of source of funds, and whatever it is that you want to ask the user. So with regulatory technology, we can actually create tiered KYC and automate the entire process of onboarding, KYC checks, and the likes of it. Some people may say, but what if I get somebody's ID and use it to gain access into the platform? With regulatory technology and built-in compliance, we can actually do liveness checks. So a liveness checks basically makes sure that The person that is applying for that account is who they say they are, and they are doing that application themselves in real time. So to do that, in the process of applying and onboarding, you just ask the user to record a video. When the user records this video, you compare the video with the ID that they've given to you. If they match, then you know that the user is who they say they are. You know that the user was not under duress whilst they were opening that account. And you could also actually use Liveness Check as well beyond onboarding. You could use that to confirm transactions as well. With regulatory technology, we can actually meet our regulatory obligations with our reporting obligations with the one-click reporting tool. So if you know that at the end of the year, your regulators need you to submit a report of the number of members you have, the total amount of money you hold, the total value of loans you've given, then you can build all these reporting tools into the application, or you can make sure that your vendor has all of this in the application. So when it comes to the end of the year, if you want to do your compliance reporting, you click one button, it gives you a list of all your members. It gives you a summary and a report on your members. You click another button, it gives you a report of your loans. A third button gives you a report of your savings account and your total portfolio and the total assets that the credit union holds. So with regulatory technology, we can actually achieve a lot by not only authenticating our users, running through doing KYC on our users, but we could also comply with the regulators and reporting, etc. RegTech can actually also help us with capital requirements monitoring. So some regulators may put several capital requirements. They may have capital requirements that institutions have to meet. For example, in the UK, if you want to register as a small EMI, then you cannot process transactions over 3 million a month. So with those kind of capital requirements, you need technology in place, you need tools in place to monitor and make sure that you don't actually exceed the capital requirements program that's been set up by your regulator. RegTech is not limited to everything I've said. There are some regulatory policies that may be peculiar to you or to your jurisdiction. You could actually achieve those as well. You could build those into the product as well. Number 6 on my list is foreign exchange and international payments. So as a credit union, you will find that a number of your members either make or receive international money transfers. So if you're trying to give your members or customers or clients, because this could be a microfinance bank, it could also be a credit union, it could be a FinTech or other financial institutions. You may have customers, users, or members. So if you understand that your members, let's take for example Caribbean credit unions, you would find that a lot of your members have family in the US or in the UK and they do a lot of money transfers. So why don't you make it easier for your members to receive these transfers straight into their accounts with the credit unions, and then they can do anything with it from there. So if your core banking application is open enough, you can then plug in APIs from third parties that will enhance your banking application to be able to do foreign exchange and international money transfers. So international money transfers could become a huge source of revenue for the organization. It could also become a value creation process for the members of the credit union. How can you achieve this? So you realize if you're sending $100 from the US to Trinidad or from Trinidad to the US, you'd realize that you pay commissions on that. Now, Western Union would probably charge you about $10, $5 to $7 to send $100. Meanwhile, your credit union, you can come and say, for all our members, we will only charge you a commission of $2. So you're creating value for them because it means they're spending less to send money or receive money from overseas, and the credit union is also making profit through the introduction of a new service to their members. You would also realize that a lot of your members travel around the world. So if they don't send or receive money, they travel around the world. And one thing that every individual that has products with financial services or that has money in a bank, everything they want to be able to do is to be able to carry their monies with them wherever they go. So if I'm a credit union member in St. Kitts and Nevis and I have an account with your credit union, I have a card connected to that account, then it's important that my card also works when I leave St. Kitts and Nevis. It's important that my card doesn't only work when I'm in that jurisdiction or that location. So if I travel tomorrow to New York or I travel tomorrow to London, I should be able to use my credit union card, and it should just automatically do a conversion. It knows I'm spending in US dollars, it converts it to the base currency, and it can also tell me in real time via mobile app to say, you've spent $100 today, this is the exchange rate for what you have spent. So the user in real time, as well as receiving the service you're giving to them overseas, they're also able to see your exchange rates in real time because they have access to this mobile app that gives them push notifications every time they do a transaction. So if I do the first transaction and I realize that the exchange rate is not favorable to me, I can then abandon that process and not use the card again. Or I should be able to go into the app and say, I want to use my card in America, what is the exchange rate? And I can get that directly on the app. Next, number 7 is the card payment infrastructure. I have to say, a number of credit unions are doing quite well in this area actually. You find that a lot of credit union banking applications actually are now integrated with MasterCard or Visa. At the least, your banking application should support card integration, MasterCard, Visa at the least. You can add American Express and the other providers available. After implementing this first stage, the next stage is to make sure that your debit card attached to the member's account is smart, in the sense that the user should be able to control the debit card from their banking app in real time. So I should be able to open my mobile app, enable my card for payments, disable my card for payments anytime that I want. I should be able to also activate a new card that I've just received via the mobile app. In addition to that, due to the smart integration, when I purchase something online and I wish to pay, I can also authorize that payment by using the mobile app that is connected to the debit card I'm paying with. Also, your debit card should be compatible with Apple Pay, Google Pay, Samsung Pay, because that is what a lot of your members are using. They are using these digital wallets and connecting their debit cards to the digital wallets. So at the least, your core banking must be integrated with Visa or MasterCard. You should look out for smart debit card features, give the user full control of their debit card, let them manage their debit cards from their mobile banking apps or from their web apps. You can use the mobile app to authorize payments on the debit card and make sure that the cards are compatible with digital wallets and contactless payments. E-commerce and marketplaces is a very important, interesting aspect. So a lot of credit unions may not find this relevant to them. However, I always think that if you have a membership base of 20,000 people, you would find that 50% of them, especially in the Caribbean, 50% of them are entrepreneurs. So why don't you make it easy for your members to actually conduct business amongst themselves? One of the easiest ways for you to do that, you can actually do that as part of your banking application, because for a user to gain access to this banking application, they go through a KYC process and an onboarding process. So every user knows what process they went through in order to gain access to that platform. They know they've been thoroughly checked. Therefore, there is an element of trust amongst all users that find themselves on that platform, because they all know that they've gone through a process to identify themselves, and they all know that if the credit unions trust these people, then I should also trust them, or I might be able to give them a chance. So with the marketplace, you kind of create a directory for your members. Your members can come and say, I sell this, I'm looking for people to buy this. Some people can also say, I'm looking for this service, I'm looking for service providers. You can also have advertising, where business owners that are members of your credit union can log onto the banking app and advertise a product or a service, and then you show those ads to other members on the platform that are relevant to that particular advert. You could also have a member directory where people can see information about other members, connect with other members if they want. You could have a messaging and a chat messaging module that users can send messages back and forth, especially if they're trying to do business. You could also have agents on the platform. You could have business referrals and transactions on the platform.
Now, if everybody that uses your banking application has an account with your credit union, then you realize that if I do business with member A, I can simply authorize the transaction and pay that member from the balance that I hold with the credit union. I should be able to do this easily on a mobile app or on a web app. So like I said, e-commerce and marketplace may not be relevant to some credit unions, but I think that if you're thinking about adding value to your members, you should think beyond savings and loans accounts. You should actually think about other things that you could do that would add value to the lives of your members. So giving them an e-commerce platform or a marketplace, or giving them a point of sale system where they can accept payments via mobile is a great value adding initiative for your credit union members. The next thing I think you should consider is the technology stack of the banking application. So the technology stack basically looks into the technology with which the core banking application was built. It is important when you're choosing your next banking software that you avoid legacy software. So legacy software are software built with outdated programming languages, outdated tools, frameworks, and/or methodologies. With legacy systems, you find that it is very difficult to scale up those systems to include new functionalities and new features. A lot of banks and financial institutions that have legacy systems, they are now rolling them out and developing new applications. What I find in my interaction with a number of credit unions is this. A lot of the vendors of credit union software right now, a lot of them still have legacy applications. A lot of them still have applications that you cannot scale up. A lot of them still have applications that you would struggle to add a lot of these features we have spoken about. So one of the things that you should look out for when you try to pick a banking application is the technology stack with which the application was built. You should look at applications and favor applications with modern programming languages because they are more versatile, they are more AI ready, and it's easier to capture data, analyze those data, and use the data you capture to make informed decisions. Also, when you're looking at the technology stack, you want to focus on functional and object-oriented technologies, object-oriented functional programming languages. If you want to find out what that means, I will explain that in more detail at a digital risk management program. So I invite you to join that program. Now, the tech stack and framework that was used to develop this banking application is extremely important because it determines the scalability of your banking software. It actually determines if we can add new features in the future or if we're stuck with what we have. So some of the technologies you should look at when you're looking at a banking software, you should look at the back-end technology. The back-end is the core of the application. It's what makes the application. It's like the brain is the engine room of the application. So the back-end technologies, you should look at, I think, these 5 technologies. If your banking application is built with one of these technologies on the back-end, then I think to a huge extent you're safe. So you have Java, Python, .NET, C#, C++, you have Ruby, and you have Haskell. Haskell is usually used by big financial institutions. Python is used increasingly these days because Python favors data science, data analysis, artificial intelligence. So Python is a really good programming language for modern banking applications. Then Java is probably the oldest programming language for financial institutions. A lot of financial institutions have built their applications on Java, Haskell, and Ruby on Rails. So these 5 back-end technologies, they are guaranteed to give you a very scalable application that you could start with A and end up with C, D, E, F, B, C, D, E, F tomorrow. On your front end, you want to look at JavaScript, HTML, CSS, Angular is a JavaScript framework, React, Vue, and jQuery. All of these are good front-end languages. On your mobile, either you're developing on the native Android and native iOS, or you could use a cross-platform stack to actually develop your mobile application. So if I was to choose a vendor based on the stack, I would actually favor vendors that use cross-platform programming languages for mobile. What a cross-platform means is that you develop the application once, and you deploy it both on iOS and Android, maybe even any other supported operating system. However, with the first two options on mobile, native Android, it means you're building an application specifically for Android. Native iOS, you build specifically for iOS, which means you're going to manage two different applications if your mobile applications are built with native technologies. However, if you build with one of the cross-platform technologies like Flutter, React Native, and PhoneGap, I think PhoneGap has been discontinued, I'm not sure, but the most common cross-platform technologies out there are Flutter, which is owned by Google, and then you have React Native, which is owned by Facebook. So if I were to choose right now a banking application, my first preference from the stack I've given you would probably be Haskell on the back end. I would go with React on the front end, and as a mobile application, I would choose Flutter. I could also go with something like Python on the back end, React on the front end, Flutter on the mobile. I could do Java on the back end, Vue on the front end, React Native on mobile. So it all depends on the skill set of your tech team, your IT team, the people that will manage the application going forward as well. In a lot of cases, it also depends on preferences, what the people that will manage the application like to use, but all of these are supported. And I think if your banking application is built on one of these technologies, on the back end, front end, or mobile, I think you will be okay. Number 10, your banking application should be ready for digital wallets and crypto integration. Now, I know a lot of credit unions will not agree with me here, but there is one thing I should tell you. You see, with technology, a lot of the technology innovations, initially when they come out, some people adopt them, some people are opposed to them. As more people adopt those technologies, you get more people, other people that were opposed to them, starting to be open-minded. So the more demand you have, the more supply you have. The more supply you have, the demand increases as well. So one thing that I can guarantee anybody watching this video is that digital wallets and cryptocurrencies are here to stay. And in the very near future, you will find that your members prefer to make payments via cryptocurrency or digital currencies than physical cash or card transactions, credit card or debit cards. Why do I think so? Well, digital wallets are very convenient to the modern financial service consumer because I carry it on my phone. All I need is on my phone. I carry my phone. I usually have, everybody has the phone with them every time anyway. So it's so convenient to pull up my phone and say, connect my card to Apple Pay, Google Pay, or any other digital wallet and tap my phone to make a payment. So you have cryptocurrencies like Bitcoin, Ethereum, and other stable coins. They're increasingly becoming the preferred payment method. A lot of people hold billions of dollars in cryptocurrencies. So as a credit union, you have to have a futuristic product development roadmap in place, which means you're not just looking at how people are consuming financial services today, but you're thinking about how people will consume financial services in the future, in 3 years' time, in 5 years' time. The last thing you want to do is change your banking application because you cannot integrate crypto now that crypto is mainstream. So whilst you're choosing your banking application, if your banking application is open, if it's open banking enabled, then even if there is no crypto integration right now or digital wallet right now, it is something you can add in the very near future. To even convince you more of the need to integrate digital wallets and crypto right now, all you have to do is look at some central banks and what they're doing. The Bank of England is leading consultation on creating its own digital currency. The East Caribbean Central Bank has successfully created its own digital currency called Dcash. Right? So as a credit union in the Eastern Caribbean region, how are you looking to tap into the new Dcash initiative by the central bank? So thinking about the future, it means that your banking application should be ready for these kinds of integrations or any kind of innovation that springs up that enable people to make payments. So your modern core banking application should support crypto and future digital currencies as they spring up. If your application is open enough, then you will be able to add features to it in the future, even though they don't exist right now on your application. So some of the things that you could do with crypto the ways that you could integrate crypto into your core banking application, I'll give you 3 of them. The first thing you can do crypto to cash exchanges. So you can allow users on your banking application to liquidate their cryptocurrencies, turn it into cash, and withdraw it into their bank account, or spend it via their debit or credit card. Next thing you could do is point of sale transactions. So you could also allow your members or customers to walk into a shop, right, buy something and pay in Bitcoin, whilst the shop owner receives the value in fiat currency or TT dollars, for example. Right? So the recipient can receive the funds in TT dollars, or they can receive it via crypto and decide what to do with it. Then finally, the way that you could also integrate cryptocurrencies is to support transfer of cryptocurrencies from one credit union member to the other credit union member. You could also allow members to fund their credit union accounts with cryptocurrencies. Now, one of the things a lot of people are concerned about is the anonymity of cryptocurrencies or Bitcoin. But when you think about your customers, you have done comprehensive KYC on your customer. Now, if your customer is trying to carry out a transaction after the KYC, if they're trying to use, even if they're trying to pay via card or bank transfer, when you suspect something is amiss, you usually pause that transaction and ask the user to submit proof of funds. You can do exactly the same thing with cryptocurrencies. If you realize, if you have thresholds and you have transaction limits, the minute the users hit the transaction limit, you can ask them for the proof of source of funds, even though their payment is via crypto. So the same way you can apply KYC to people spending physical cash, you could actually extend those KYC to include crypto transactions. Number 11 I have on my list is penetration testing. Now, penetration testing is not a feature of the application, rather it is an activity that I think all credit unions should undertake before they choose a software or a software vendor. Due to the cost of undertaking penetration testing or pen test, you may not be able to do this for every application you're trying to or you're considering. Rather, you walk through everything, you pick an application, but just before you sign and pay for that application, you run that application through a pen test. A pen test basically involves a specific kind of test that is usually done by a third party. They usually call them ethical hackers or white hat hackers. Now, they would use a mix of automated tools, software applications, manual processes, manual codes to simulate an attack. So a pen test basically is a process of testing your banking application to see what happens if hackers try to gain access into the application. So with that, a pen test will expose a lot of vulnerabilities. If there are any vulnerabilities with your banking application, your independent pen test would expose that. And then it would help you make an informed decision of if to tell the vendor to fix those vulnerabilities before you buy the application, or to abandon the process completely and start considering another vendor. Right? So the pen test basically exposes your core banking application, exposes any weaknesses found in your core banking application. Number 12, that I think this is also not a feature, rather an activity or a request that you should make. So sometimes I've given you, this is number 12, I think I've given you 10 features so far to look out for when picking your next banking software. Sometimes it might actually be tricky to find a software that has all of these features in place already. So a compromise in that instance would be to look at the software. If you've decided to go with a vendor, you look at the software and look at all of the features that the vendor has in place. Then you ask the vendor for their product development roadmap, or a PDR. A product development roadmap basically shows you, the credit union, what the vendor plans to do with this software over a period of time. So it will show you all the features that are planned on this application. In fact, you can actually make the PDR a part of your licensing agreement or your contract to ensure that the vendor lives up to his obligations. So if the vendor shows you a product development roadmap and you sign a contract based on that roadmap, then it could be legally binding that at this point in time, you expect the vendor to add additional features to the platform. And if the vendor doesn't, then you can take any action because that would be a breach of your contract. To know what a product development roadmap is, I've given you a simple example here. This is a high-level view of a product development roadmap. As you go along, you can break this down into smaller tasks that will be implemented over that period of time. However, this gives you a clear view of what this vendor plans to do with this application. So the vendor says, if we launch this application in 2022, you would be able to do money transfers, you would have a digital wallet, and you can have foreign exchange. 3 months later, the vendor plans to integrate open banking and payments. Then, at the end of the year, the vendor plans to add e-commerce capabilities and marketplaces to this app. The vendor also wants to add point of sale features. Then, a year later, the vendor wants to improve money transfers and open banking. The vendor wants to integrate debit cards. The vendor also wants to integrate business invoicing. If you look the next year plan, in 1 year's time, the vendor plans to do API as a service. The vendor wants to create a bunch of APIs and expose them to third parties and then charge a fee every time the third parties access those APIs. So you can see the kind of APIs that this vendor plans to create: a global bank list, transfer rates, currency converters, open banking payments, etc. In June, this vendor plans to include micro-lending services. The vendor plans to integrate crypto assets. And then October 2023, the vendor plans to add robo-advisory features to the application. Then by 2024, the vendor wants to become a full global digital bank. So with a product roadmap like this, I am able to make a decision to say, okay, even though I will only start with money transfer, digital wallet, FX market, I feel comfortable that this product will improve over a period of time. So it is very important to ask your software vendors for their product development roadmap, so you can see where you are right now and you can see the features that are planned, that are scheduled for development in the future. Number 13, API integration. So API basically stands for Application Preference Interface. I have talked about APIs repeatedly, and now I will explain to you exactly what APIs mean, right? Now, when we talk about open banking initiative is powered by APIs. It is through the APIs that you're able to communicate with a different bank that you have no physical connection or cloud connection to. So, an application preference interface is basically a set of rules that gives you access to data from a third-party platform. So, for example, Scotiabank builds a banking system that is open banking enabled. Scotiabank develops a bunch of APIs and creates documentation for those APIs. So they tell you how they expect you to use those APIs. Then I'm a credit union. I come in and I say, oh, now I have an open banking platform as well. I set up my credit union. I like these guys, Fire Service Credit Union. I like them a lot. I think they're in Tobago. So I set up my Fire Service Credit Union and I say I want to integrate with Scotiabank. I have no physical connection to Scotiabank. I will just access Scotiabank APIs and pull out only the data that I need to pull out from their APIs. Scotiabank will need to authenticate me to make sure I'm a legitimate business that is trying to access their customers' data. The customer would also give me permission to be able to access their data. The customer can rescind that permission at any point in time if they do not want me, the Fire Service Credit Union, to gain access to their information anymore. So when you look at network innovation is very favorable to API integration. So with network innovation, you focus on leveraging on partner networks and external data channels to actually add functionalities and features into your application in order to create value for consumers. What does this mean in plain English? It means that if I want to do KYC, electronic KYC, then I don't need to build an entire KYC feature. I can go to an existing company that provides eKYC services, I can then say to this company, hey, I want to use your eKYC services in my banking application because I don't want to build it from scratch. So I will reach an agreement with this eKYC provider. I will integrate their KYC, their whole KYC application into my banking application using APIs. So in this way, I have leveraged on a partner's existing business using external data to actually onboard my customers on my new banking platform. Therefore, I'm creating new value for my customers by tapping into the APIs of an external institution. So network innovation, basically, you tap into people within your network, you use data, you exchange data, and use this to drive value creation for your customer. So some examples of the APIs that your core banking could integrate, these include open banking APIs. So if you're trying to get customers to authenticate payments, you can call up this API, allow customers to log into the account. You can allow customers to confirm payments. You can also check the status of payments by simply integrating an open banking API. So I can be on my platform, Fire Service Credit Union, and I am able to allow customer A to come to Fire Service Credit Union and then log into their Scotiabank and give me access to their information in Scotiabank, right? I could also allow the same customer to come to my banking platform, Fire Service Credit Union, and they say, I want to pay money into my savings account. Then I ask you, how would you like to pay? You say, I hold $5,000 at Scotiabank, and I want to transfer that money to my savings account. Then I say, okay, instead of you going to Scotiabank to withdraw that money, then come back and pay it into your credit union account, I would simply say, log into your Scotiabank. You log in to your online banking via my Fire Service Credit Union portal. You authenticate yourself on Scotiabank, and then you tell Scotiabank, I'm asking you guys to give Fire Service Credit Union access to my account. So you're able to do that without a physical link between both banks. This is how you tap into network innovation by using API integrations. Some other API integrations you could use, I've listed some of them here. Again, this is not an exhaustive list. I've listed these APIs because of some of the things I've spoken about. So I talked about integrating blockchain, cryptocurrencies for payments, point of sales. Again, you don't have to build that whole application yourself. You can integrate a blockchain exchange API that you call that API every time you want to do a transaction, and it handles it for you. You can integrate some payment processing API that allow you to pay with credit card, debit card, Bitcoin, etc. You can also integrate an exchange rate API. So if you've got foreign exchange on your platform, your customers need to know how much you will sell them $1 for or £1 for. So with an exchange rate API, you can give them instant exchange rates once they visit your platform by tapping into an existing API. I've talked about the KYC and anti-money laundering APIs that you could use to do eKYC and continuous monitoring of the customer. You could also partner with other partners and bring in other APIs into your application. You can do some more payment gateways. In fact, you can bring in an accounting API. You could integrate an accounting API with your core banking application so that users can simply just get statements, can automatically do their end of year taxes without having to do them manually by simply plugging an API to their bank account to pull out all the data and do all the work that the accountant needs to do. Okay, number 14, chatbots. Now, chatbots are quite interesting. When you think about credit unions, you realize that all of the phone calls you get, they're usually about very similar requests. Information about your loans, repayment rates, etc. Information about how to become a member. Information about how to set up a savings account. Or what's my account balance? All of those things are things that you could actually achieve by integrating a smart chatbot or cognitive assistant into your banking application. Now, this chatbot will be different from a lot of the things you see online because a lot of these chatbots you see, they just give you generic information. However, this chatbot will be connected to your bank account that once you start chatting with the chatbot, it would ask you to authenticate yourself. So it will give you a form to enter your email and telephone and password. As soon as you do that, it asks you for any other authentication it wants to do. and then it starts giving you the service. So with your chatbot, you can simply type, what is my account balance? It tells you what your account balance is in real life. You can ask this chatbot any question about the credit union. It would give you responses to those questions. So compare that to having a member of staff always responding to questions and queries from customers. You will realize that you will get a higher customer satisfaction rate if you use a chatbot that is well designed. You could also integrate voice technology into your chatbot, into Siri, into Google and Alexa, where you can say, Alexa, pay this person $20, and Alexa will carry out that transaction because it's integrated in your banking. You may ask, how does Alexa know that this is me giving the instruction? Because Alexa knows your voice. Again, we talk about voice technology. It means that all of these platforms know your voice and they can instantly recognize and differentiate your voice even from that of your twin brother or twin sister. In addition to that, you could also integrate your chatbot with third parties. So as a user of your credit union, I should be able to interact with the credit union from Facebook, Skype, WhatsApp, and other third-party platforms via APIs. So from Facebook, from Skype, and from WhatsApp, I can chat with the chatbot that has been integrated in the bank, in my banking software. So I could be on Facebook and say, hello, fire service, what is my account balance today? The chatbot will authenticate me on Facebook. Once it knows that it is me, it will then tell me your balance today is XYZ without me leaving Facebook, without me leaving WhatsApp, or without me opening the banking app at all. So these are integrations that you could do with chatbots in-app and as well as outside of the app on third-party platforms. Finally, one of the things you might want to consider when developing or choosing a banking application are the cost of the application. Now, every time I've consulted for credit unions trying to choose core banking applications or banking applications, you realize that the major focus is on the cost of the application. The cost of the application could be a major determining factor. When analyzing the cost of purchase, it is important to also consider other benefits that you may not be able to measure. For example, the convenience of a member being able to sit at home and carry out all of these transactions is something that you cannot measure in terms of physical cost. So the return on investment may be more of a customer satisfaction rather than a revenue generation for the business. Sometimes credit unions don't understand or they can't justify why they should invest huge amounts of money in developing banking applications. It is also important to measure the value that the software will create for the people, the society, and the business. Rather than looking at the monetary gains and the monetary returns on investment, we should actually measure, there are ways that we can measure the value that we create for people and the value that we create for our society as a result of digitization. If you would like to learn how to measure value, then I suggest you join our value-based digital marketing course. On that course, we have a specific module on measuring the value that credit unions create for people, for the society, and for the business. Then finally, it is important that you analyze all the possible ways of implementing a core banking software with all your desired features at the lowest possible cost. How do you actually go about implementing a core banking software with all the features we've spoken about at the lowest possible cost? You will find that there are three main options. You can build it yourself, you can buy it, or you can rent it. How do we go about doing so? The first option is a bespoke solution. So we can put a team together as a credit union or a microfinance bank, FinTech. We can put a team together and develop our core banking application from scratch by integrating a number of APIs to achieve all of the features that we want. At Rixtech, this is something that we do. We have done it for a number of businesses. We have developed core FinTech applications from scratch for a number of organizations. The next step you can do with the bespoke solution is that you can use an open source application, then customize it to suit your needs. Open source applications are applications that have been built by usually a group of people, and they release these applications to the public. You can download it for free and deploy it and start using it as out of the box, or you can customize it even further before you start using it. Some open source banking software include Cyclo, Mythos, OpenCBS, MyBanco, and many more. If you want to figure out some other open source banking software applications, simply go onto Google and type open source banking software. You will get a list of them. How do you decide which one of them to use? Again, you have to look at the technology stack of these open banking software applications and then figure out which one of them is using a technology that you have the human resources to manage or to customize further. I would strongly suggest that if you're using an open source banking software, make sure that you do a thorough investigation, look at all of the documentation first before you actually choose to use this software and deploy it. Most importantly, look at the technology stack, the programming language in which this application was built, and then make sure that you have the human resources to continue working with those technology stack. The second option is to buy off the shelf. So you could simply go buy a banking software off the shelf and use it as it is, or you can customize an off-the-shelf software to suit your needs. So you can buy a software off the shelf and customize it even further to suit your needs. The second option is that you can buy a software off the shelf, yes, and customize to suit your needs. Sorry about that. You can use it straight off the shelf, or you can customize it to suit your needs, even if you buy it off the shelf. The number 3 option is to subscribe to a software provider or vendor. This is where a lot of credit unions are. I know that a lot of credit unions actually buy from software vendors. So you could actually buy, the first option is you can buy a software application that is a one-size-fits-all. This vendor has built an application that does XYZ. Every credit union uses this application the way it is with ABC, XYZ features. You could also go to subscribe to a software provider and then tell the software provider to customize your own application even further. So it looks and feels and does different things to other people using the same software from the same vendor. Whichever option you decide to use, again, is specific to your needs. I would like to go into more detail and give you all of the advantages and disadvantages of each of these options, but for the sake of time, I will just end this bit here. If you want more information about how to choose each of these options and the advantages, disadvantages that you need to consider before you make a decision, then again, join our digital risk management program. We will go into more detail about the advantages and disadvantages of all of the options I've given you so far. Now, based on your decision here, the next slide is, if you decide to go with a bespoke option, how do you then develop that application? So buying off the shelf, we don't have a lot of control over it. Subscribing to a software provider, we have some control. However, by the time you tell a vendor to customize the software for you, the fees for customization may be so high that you might not be able to afford it. So option number 1 might seem more appealing to you, especially if you do not want to pay annual licensing fee to any vendor. Then you might want to consider option 1. If you're considering bespoke solution, how then do you develop a banking application? So we have suggested a bunch of things. First, your banking application should focus on financial inclusion for the underbanked and unbanked users, right? It should include all of the features I've spoken about, international money transfers, but most importantly, you should consider creating a segment for business customers. So I would suggest that your banking application should have the individual personal users and the business users. I think that your banking application should connect to the global markets through APIs. Your banking application also should be a one-stop shop for your members or your customers, because our members and our customers shuffle through different platforms and different applications to achieve their financial objectives. Therefore, you should consider creating a one-stop shop for your customers, enabling them to hold money, to pay for stuff, to spend their money, to transfer money to other people, and to exchange currencies with people in international markets. So some of the features I would recommend are things like, for your platform, API-driven, open banking, automated KYC, AI-powered, enhanced security by design, We talk about chatbot integration on social media, Facebook, and the likes of the other platforms. Also guarantee the user a smooth onboarding experience. So in 5 minutes, I should actually be able to onboard to your application in 5 minutes. And the way you design that is you only take the information that you need at that particular point in time until the user wants to carry out further transactions. Then you keep asking them for more KYC information as the need arises. So for personal users, you could have a lot of features here: transfer money, exchange currency, pay bills, receive salaries, fund your account offline, like I said, crypto integration as well. For business users, allow them to receive payments for goods and services. Now, because all your customers and your members and your users are in the same ecosystem on your credit union core banking, it means that you can actually do same-day settlements. With banks, if I receive money from my physical shop, I don't get it into my bank account. Sometimes 3 days later, sometimes 5 days, other times 7 days before I get that money in my account. But if both the seller and the buyer are members of your credit union and they use the same banking application, it means that you can settle them instantly. Because if anything goes wrong, you can just reverse that payment on your platform. Okay, so allow business users also to make international payments to other businesses. Give them invoicing and inventory management. So the small businesses do not even need to build their own websites or build e-commerce platforms, because they can just direct people to their shop front on your banking application. Allow them to accept cashless payments in store. So if you've integrated your banking application with mobile payment features and you've deployed a mobile application, it means I can go to a shop, buy stuff, and then at the checkout, I can tap my phone, scan a QR to pay, or enter a reference code that the vendor, the shop owner, gives to me to make a payment. So business users will also be able to receive payments in crypto, should be able to receive payments in cryptocurrency. Take note that everything I have said, I'm not saying that you've got to have all of this before you launch your application. It is desirable to have all of these features before you launch your application. However, if you've got a good product development roadmap, you could start small and you keep adding features every 3 months or every 2 months, every month, however the case may be. Now, if you want to learn more about choosing your next banking application, or if you want to learn more about emerging technologies, you want to learn more about the digital risks that these emerging technologies are exposed to, then I invite you to join our next program, which is our Digital Risk Management Training Program. It's a 3-week program that starts on the 7th of September. It would run 2 days a week and will walk you through a very, very holistic digital risk management training that covers even more details about choosing your next banking application. We will cover a whole bunch of other stuff.